Good afternoon, everyone. Welcome to Thursday, January 22nd, 2026, Trading Trends with John Salama. Let's get right into it. There's some things happening today. Oh, just some portfolio stuff. I got out of silver with a profit, almost 10% profit on a good amount of capital, and we actually rolled that into a lower volatility asset like gold. Go figure. Everything is ripping in terms of the metals today. Can't stop, won't stop. Let me drag out the dashboard panel and the doc first, and you'll see what I'm talking about. But the metals trade, no changing that right there. Let me share my screen. I'll get into other portfolio moves really fast. Well, let me put up the doc first. Boobity bop. What else? Oh, yeah. So I'm heavier in Mexico. The portfolio pretty much split. Updating you on the internal strategy. The portfolio is pretty much split into Mexico and gold. So I love that allocation. And then I bought the SOX, SOXX. That's kind of a different weighting one versus the SMH. It's not super heavy in NVIDIA, although NVIDIA makes up 7%. Micron is continuing to rip, and ASML today. And then I bought uranium as well, and South Korea are almost equal size position in the portfolio. And that's what I have right now. I will not have a video tomorrow. Maybe come back on Monday with another one. So I think that's about it. Yeah, and the only other thing I was considering adding was KBE, the banks, but that was a last minute no trade. All right, let's get into it here. I'm not sure if you guys can see this. Let me blow it up a little bit more. Okay, trading trends to close out the week. Let's do it. Yeah, we'll actually be at the Sixers game tonight. So if you see a short, me putting it up, hopefully it's me talking to Tyrese Maxey and Embiid saying we're making fun of Kevin Durant, although I like Kevin, you're an Olympian. All right, trading trends. So today, genomics really ripped, biotechs, new highs. We're going to look at the ARKG, Kathy Woods basket. Behind a massive move from Meta pushes XLC higher, and Brazil, new 52-week highs. They really flocked into this part of LATAM. And the only really thing getting hurt today was oil. Oil down about 2.5%. We'll take a look. And really, when we zoom out on the past 5 days, what happened was really a massive, everyone's talking about it. We talked about this Thursday night when I was presenting at the CMT. I said this night gas is probably going to rip due to the frigid temperatures on the East Coast. I still think we'll take a look at the chart instead of think. But we're supposed to get a massive snowfall here on Sunday, depending where you are. People are estimating 2 feet. I think they're going to be right on it. So nat gas, the big talk of the town this week, up 37% till right now. And then a big decline in Ethereum and also Bitcoin. We'll take a look. I said I was bearish on Ethereum, and that is continuing. It's funny when I say something bad about crypto, I see myself losing subscribers, but I'm not, painting. I'm just telling you what is in front of me in the charts. Also, another thing, I said the best trade on the board 2 days ago was the KWeb put spread, and I was very close to doing it. There was no meat on the bone for that trade, so I did not do it. And I'm glad I did not, because a lot of them ripped. They based at that level and they continued higher, kind of similar to what was happening in software, but doesn't make me want to go long for the dead cat bounce. All right, so let us get into here. If you have a ticker or something, put it in. We'll take a look. There we go, dashboard panel. All right, really fast, getting into the movers. Tesla up 3% today. That thing's down about 3% on the year. Meta, a massive 5.5% move, still down 3% year to date. AMD up 2%. That thing's up massive 18% year to date. Microsoft finally up almost 2%. That thing's been a dog, down 7.5% in 2026. IWM, new highs today, along with RSP, up 1.25%, up 10% on the year. Sometimes small cap does that on a whole year, and that was it. So if you're looking at that cup and handle, and a lot of folks, in December said you're not bullish enough on small caps, this is what they were talking about. Gold up 1.7%, up 13% year to date, trumping even small caps, and it's up 76% year over year. One of your absolute top performers and an anchor of my portfolio. That trade is not going anywhere anytime soon. You look at that, just at the strength of rising 200-day moving average, not one touch of it, even when SPY hit 52-week lows in April on the whole Liberation Day and the tariffs. No one touches it. Gold, they're not selling it. They're not thinking about selling it. Bob up 6%. Well, I was telling you about. I'm glad I did not touch KWeb short. This thing's up 22% in 2026 for one of your absolute top performers in single stock land. Silver up 4%. This thing's up 35% in 3 weeks. So absolutely bonkers. We're going to take a look at the SILJ, which is the junior silver miners. This is a lot of folks are attracted to this. The volumes, we'll take a look at that. chart as well. And a couple more. Amazon up 2%. It's flat on the year, basically up 2% just from today's gains. And then Netflix continues to be a dog, down 2.5%, down 10% on the year. Intraday action. Let's get into it. So we opened at the bell and they immediately wanted to sell it. We went below VWAP. We actually troughed at roughly 687 at 10 a.m. And then they started bidding it up. And here we are at 691. Again, we'll just look at this fractally. I don't think we're going to get there, but if you got above 694, it's not going to happen today, but if you got above 694 and an overbought registration, we're going higher. That's really pretty much it. We'll see how this trades for the rest of the day, for Thursday session. And of course, tomorrow's Friday, but things looking decent. SPY up 83 bips, IWM up 1.3. As I zoom out here, okay, so SPY all-time highs again was struck 10 days ago when we pierced 696. I still see us closing in on a bearish distribution phase, which is what we're in right now. I know it sounds crazy because we're just, a percent away from new all-time highs, but I'm looking at the chart and the relative strength of SPY versus other more, global indices like IWV. I see this, bearishness, as it were, ending in about 7 days in terms of more of us being a buy the dip instead of sell the rip mentality. For me, this is, a little bit, I don't want to say helter skelter, but here's 50 RSI. Here's, I'm doing it because you can't see because the box is here on the bottom of the window, my face. You're welcome. But I mean, we had a small dip here. It was an ugly candle 2 days ago when we lost that 2%, right? I'm looking at cycles here. I see bearishness for ending about the 27th to 29th, somewhere in that period. So somewhere middle of next week. And it's funny because the mega cap tech earnings is that specific period. You kind of got a cheap setup going into the Qs. That could be a setup. But in terms of the SPY levels, again, I see us being straddled. I've been saying it for a while, right around that 687 area, okay, plus or minus 1%. Right here, we're within that percent as we trade 691. The floor for me has not changed to the ugliness. If we get there to the downside, right around that 675 to 680 mark, it's pretty clear for me, and that will be your setup to buy next week. And then I think it's not a dead cat bounce considering we had new all-time highs in this index just less than 2 weeks ago. I do think you will finally get that 700 piercing in SPY in early mid-February. Right now, my date is somewhere around like Feb 15th, that Valentine's President's Day weekend, actually, where the market is closed, I believe, that Monday. So right around there is where, in terms of cycles and trajectory of this, Bayesian probabilities, path dependency, I see us piercing to get new all-time highs around then. Mega catalyst is going to be next Tuesday, Wednesday, Thursday, when you have Microsoft, Apple, Amazon, Meta, and Google earnings reporting. Again, we were talking about their concentration, what they have in terms of upside, what they're going to talk about guidance in terms of AI. Everything's going to be baked in essentially from last quarter. No one cares about that. That's already in the stock. But what are they going to say about next quarter? So that's going to be a major catalyst, and possibly we'll get to 700 SPY on that. But we will see. They're going probably going to overreact. So that is it for SPY. Let's get into the movers of this week because I'm blathering. I feel like these shows are too long. Give me some feedback. Just type in the chat if you want to see me focus on something else a little bit differently, risk management, whatever, what have you. I'm a big 2 ATR risk guy. You can look that up for what it means. All right. Biggest mover on the board today. This is a microcosm of biotechs. This is Cathie Wood's basket. We've been saying this is talking about this on Spaces for a while. If you want to play biotech, yes, you can play XBI. I like Cathie Wood's collection as well. Looking at this, overbought in this fury here back in early October. And guess what? Those were the prior 52-week highs, October 20th, 9 days before the NASDAQ peaked at 3406. Look at this breakthrough today on a 6% surge. And look at this beautiful cup and handle here, basically basing under $31 for the longest time until early October. And then I don't know if you can see that, but boom, cup and handle and a runaway here. Not even a touch of the 200-day moving average since we had shorts on basically in mid to late August. You are not overbought here. So I'm seeing a little bit of bearish divergence, not even screeching 70 on the RSI, but beautiful looking candle. I'm going to see how this closes at, 3:30, 4 p.m. hour. The high of the day is 34.39. It's 11 cents off from that. VWAP on the day is 33.72. They're way above on that. Trades that come to mind here. Pick your spots next week too. I do think, like I said, SPY is going to settle somewhere around that 680 mark. You should take it. I do think it's going to be a decent opportunity. I've not been saying, things are scary in the market. You saw the VIX crater a couple days ago. I mean, really came off. It was pretty much, let me see, is VXX one of the tickets we're going to look at here? No, but so right here, let's go back to ARKG real fast. This looks solid. I do not want to chase this, to be honest with you, north of $33. I would rather sit and wait here. Something tells me this gets back to about, excuse me, about to that 31.5 level, and that will be your invitation. Possibly the area of the former breakout, which is 32, and that will be your invitation. But this is absolutely running right here. Great rising 200-day moving average. Don't want to just buy, straight away calls. But if this comes back and consolidates some of these big gains, again, just 2 days ago, this thing was $31. So you're looking at more than 10% in just 2 days, is ARKG. So if you're in that, Kathy Wood, congratulations. Keep it up. A great looking chart. ARKG, one of the biggest movers today, 2 standard deviations. Number 2, we're going to keep this, at a quick process. I don't want to blather here. XLC, we're talking about Meta's big 5% move, is Meta here, is communications, which peaked back here a month, believe it or not, before the NASDAQ. And now it looks kind of extremely heavy, to be honest. It's not even thinking about getting north of $119, and they've been rejecting it at that level ever since September 23rd. These guys, the big kahunas in this report, Wednesday, Thursday, we are at 50 RSI right here. So I do think this is going to be an area that they flock to. I think an entry under 116 is recommended. I don't think you're going to get taken out back and lose money here. You have a beautiful rising 200-day moving average. Your support ultimately there is at 109. That's $7 away. But this ETF also has not touched even an intraday spike lower since April 30th. So they love Meta, and of course Google is a major holder, a major holding in this, and it's keeping it afloat as they own the internet between YouTube, Google Cloud, the little thing called Gemini. Just stop it. Search, they're doing fine. They're a $4 trillion company. I think they're going to be just fine. And that's part of this chart. So XLC up 1.5% here at this writing. I think this actually has, again, major catalyst next Wednesday or next week, midweek, for earnings from major reporters in this. But I actually think this gets to, I think it gets that level of 119, and then I think they sell it again, unfortunately. We'll see if it pierces through. If it does, you're going to see NASDAQ go higher, and you're going to get really close to that 640 level from the Halloween week highs. So this would be a major thing here. Do understand that it started doing the heavy work, the lifting right here at 114, and trees don't grow to the sky. So I do think this has a little bit more to go. I think it's got $3. If you're punchy, you could do a call spread into it. And again, this is a basket, so you kind of have a hedged risk. If Zuckerberg says something, if Google says something, and single stock risk, you're going to get taken out back if you're wrong, and of course you'd reap the rewards if you're right. But right here, I do think this has a couple more dollars to go. It's a little bit tough. You could buy maybe the 117 calls and then sell the 119s against it as a trade for like 2 weeks or a month out even, and then sell going into the earnings, or cut your position in half. But I do think this is going to continue to go. Look at the candles as well. Closing at the highs today, it looks similar story. I think it's going to get into that traffic-y area here of at least, I think it's headed to 118.5 to 119. So it's got a little bit more to go. You could buy upside calls. I would just do it in terms of spread and consolidate, as I'm assuming you have rising vol here. Also, I just kind of want a little bit more of a confirmation. I want to see it to get, maybe a close above 50 RSI, something it hasn't done in almost a week and a half. But things look decent with XLC. They're gobbling it up today. Speaking of gobbling, we've been talking about LATAM as they own so much resources: iron, copper, ore, zinc, just a ton of stuff. And guess what? Last I checked, Brazil is in LATAM. A beautiful chart. Yes, the 200-day moving average was going down up until end of July. Boom. One easy way to trade this, I've been saying with the benefit of hindsight, and I do honestly, I'm not just patting myself on the back. I think I was talking about Brazil in September videos. Look what happened here. A breakout above a former area with overbought registration. So what happened there on September 15th? Easy. VWAP that day was 30.5. This is typically what happens too. and you got to have stops. So it only went to 31.30 on a high there the week after, and then boom, made you pay. Went under 50 RSI, went all the way to $29, but still overall constructive chart. Rising 200-day moving average, and here we are to 36. Two multiple closes outside the upper Bollinger Band. Last time it happened there was December 3rd and have a massive give back, although it was politically driven with Bolsonaro's son and these crazy voting implications, left versus right, of course. It was lost 6% that day, sent it on a drawdown all the way down to $31, still holding support. Here we are, 75 RSI. Buy first, ask questions later, typically is that behavior for an overbought RSI like that. This is a little bit toppy for me. It is a 52-week highs, of course. As I zoom out, people love the catch-up trade. LATAM's a hot area. Brazil is rich in resources. The former highs go back from the crazy, fun global financial crisis. This was a $102 stock in May of 2008. If you recall, oil was like $130 plus a barrel, something insane like that. And look at this moving average here, where each bar is 1 month. You have ultimate resistance here at $42. I think this is going to continue to go. I do not, all that being said, do not want to purchase right here, though. I would rather wait for a pullback. Let me go to a 1-year time frame again, see what the candle looks like. The VWAP on the day is 35.78. They're holding that. The high of the day is 36.22. Barely rejected that by 0.5%. 3% up at this time of this writing. It was up 3.5%. Still very strong. I think this has a small pullback to 33.5 over the next 2-3 weeks, and then that would be an invitation to play. EWZ positioning here as well. This was one of the worst, with that gas, the worst ETF of 2024. And usually you can get really quick moves from that in terms of positioning where everyone hates it and it's a dog. And then, obviously less people own it. And then now they're trying to crowd into it. So that is Brazil. I'm not buying, 34, 35 puts anytime soon. I'd much rather wait for an entry. This one's an absolute star. I don't want to sell the calls either, just based on the high strength it's had. And here it's a 75 RSI. Okay, what are they selling? USO, only one thing, a multiple standard deviation loser today, and that is US oil, an absolute dog, down 2.5% to where? Its exact 200-day moving average, which is 71.73. It just ticked below that on this down 2.5% decline. The XLE, I see ExxonMobil hitting all-time highs. I like what's happening in Schlumberger, Rig. If you're looking for, I think it's a cheaper price stock. Oil, USO just does not look great. Oil peaked back here on June 23rd. Again, I'm looking at USO at 83.5. The 200 moving average had been going up until this horrible decline in October, and then that's when the candles were just too heavy, the inputs, and it's been going down ever since. You had this little meerkat above here for just a week or so when everyone thought energy was getting a grip to itself again, but really that was more so the energy complex, XOP, ExxonMobil being stronger. This doesn't look so great. To me, USO is probably going to hold around $71 for a little bit. It's a meaningful point. The 71.75, it's a 200-day moving average, so it's not nothing. It is truly the view of the past year on average what oil has been closing at. But I do think over the next 2 weeks, I think this declines when I see S&P catch a bid in beta. I think they're going to go into that trade. And if they're going into, mega cap tech, a la Meta, Google, etc., XLC really helps anchor and buoy the Qs. I don't think they're going to be buying oil. This, to me, looks like it's got a 67 handle written on it in about 2 weeks. I kind of have confidence, like this is going to have a 70 handle at least. So you could, I'll look at this because I do need some bears. Possibly, I'm looking at like a 71-70 put spread, short dated, or you can go out and do the March, 68 puts. So let me look at this after I get done with our video. S&P puts, put spreads. So if you want to look at that, or you can outright short it. But this has not had any kind of holding power. This is why I would say you want to see a week above a 200 moving average. This barely had since the 13th, and then it quit. It's just not. It's not impressive. It's not what we're looking for. It's the only loser today. So I think this is headed towards $67 in the next 2 weeks. I think this is an attractive short candidate. But again, when I go in the option chain and whatnot, the juice has to be worth the squeeze. So that is a reduction of $4, 5-ish%. There's also double leverage ETFs if you just want to hold it and then have a time stop. If it's going to go, it's going to go. I like that concept, and you get out like Feb 4, thereabouts. So oil looks bad to me. One of the few truly weak spots in the market. Let's go to what they've been crushing. I don't take a breath here. I probably should, transition. I don't do it. Don't know why. Number one, let's just look at this. This is an absolute behemoth. Natural gas. It's like, what is it now? 30 degrees where I am outside. Actually, it's like 40 degrees, but it's supposed to absolutely plummet this weekend. And like I said, some areas are getting 2 feet of snow on Monday. I'm supposed to get like 10 inches where I am in Jersey. So this is very interesting. Tell me technicals don't mean nothing. Okay. I said it's going to be magnetized towards the 200-day moving average. The 200-day moving average is 1433. The high today, 1436. And right back down 1350 to 1359. It is essentially flat on the day. This thing is up 37% in the past 5 days for an average of about 7% a day. Again, this is just common sense. Helen Keller can see these trends right here. You want to see the candles get smaller in terms of the exuberance, right? So for example, on the 20th, 2 days ago, it was up 20%. That's not going to be it. That line is long of buyers. You'd have to be insane to think it was done. The next day, up another 10%. Oh, look at that. Cut it in half. The next day, I'm assuming it to be 5% or less to get its energy, starting to go lower. But instead, what is it doing? It's not up 5% or even 3%. It's down 50 pips. Again, UNG is a little different from the contract of nat gas futures. There is a little bit of a dispersion there. So they have different levels. Nat gas, the contract itself is about $5 a barrel, which is highs, basically. So not a great looking candle. It looks very identical. Look at the candles, guys. It's exactly the same from December 5th. When it meerkatted up here, I'm going to do it again. When it meerkatted up here and then it went back lower. This thing has not been above a 200 moving average, and this actually had a spot in your portfolio since late June, okay? But it's just flat out, there's, increasing heating demand because of some folks that I think wouldn't want a piece of it in their portfolio, and it is a commodity. I do think there's a chance they still bid it up tomorrow just so they own it in their portfolio. And when, New York is potentially closed on Monday, or having a very hard time getting in with, 8, 9, 10 inches of snow possibly at Central Park, I think folks are going to look at it. I don't think nat gas is going to be down on Monday. So I think some folks might just buy it, but do understand it's getting a little bit heavy here, right around that 1433 mark. So in terms of trades, this is a tough one. I mean, this is where we wish we've been saying it's going to go from here on the cold weather. I think this still has, for me, in terms of the cycles, basically to end it on this for that. In bullish accumulation, I have this being in bullish accumulation phase through Feb 1, but with a ceiling of right around 14.5, if that makes sense. So I don't want to go outright short it. I think this has a little bit more time. This is an ugly candle today. I want to see it up, 5%, 3%. It's down 65. So see how it goes tomorrow and see if, like what I'm saying, if they want to buy it going into the storm. But this has been the absolute winner all week, up 37%, moving like CoreWeave or some nonsense stock in just 5 days. Absolutely insane. Natural gas touching the 200-day moving average for the first time since December 5th. And then it did a kiss of death and went under. Another thing, too, last thing, is you're just at 59 RSI. At least there when it did it, it was a 70 RSI. I mean, it makes fools of us all. That I would understand, making a small position. That was an ugly day when it did that. The following day, it was down 8%. So I'm curious what happens tomorrow, the last trading day before the storm. Woo! Okay, let's look at this one. Number 2 performer this week and number 1 all year in your hearts and in your books. SILJ, the junior silver miners, absolutely a beta play on scarcity, on the electrification of everything. Look at this thing. You did not have to be in this trade all year. No, 52-week low was coincided with the spot 52-week low. This was a $10 stock, okay? But to be very frank with you, right here was when you should have got in. June, with benefit of hindsight, area of a former breakout mixed with a overbought registration. Bang. That's all there is to it. The entry target is objective right there is $14. And to stay long, the trend is your friend until the end. Say it with me. There you go. Right now, an 81 RSI. This is the year-over-year leader. We're going to do the year-over-year leaders at the end of the program. And I'll just give you a hint so I don't do it again. It's this, okay? This is up 15% over the past 5 days, or an average of 3% a day. That's what you want to see continuation. Not getting out of that trade, although I got out of silver just due to turtle trading rules. It slipped within literally 30 cents of the low ATR on SLV, and I went into GLD with more capital, which is lower volatility, a lower ATR. So, and it's working out wonderful. Gold new highs. But back to this monster SILJ. They love it. New all-time highs. I don't want to chase it right here. For me, my target was honestly closer to 35. So this is for me, $2 extended by about 7%. The high today was 37.78, still just 30 cents off the highs. It's holding VWAP. Thing looks absolutely like a beast. They will at some point take their foot off the gas, and I think that'll drop this to about $32. And that should be your invitation to your year-over-year leader. This thing has been crushing it. It's crazy to say that this thing was, $10 just, in April. So this is your year-over-year leader, overbought, and it can do this from time to time. This goes on this it's like 40 points a game. SGA, Shai Gilgeous-Alexander, for those that watch basketball, just consistent, amazing. It's like the Thunder might be the record for the Bulls. This is what the junior silver miners look like. It's just in a lot of the right places with the squeeze, the scarcity, and it's a beta play considering with their junior silver miners. It's almost like playing, with the way this looks, it's almost like you're buying single-handedly one of the silver miner stocks, but this is a basket. All right, and the number 3, where they're gobbling up this week and also today, we already alluded to this, Brazil. The third best trade on the week, up 8.5%, and today not bucking that trend versus the average I was just speaking of, up 3% nearly today is EWZ. Like I said, similar for what I said silver. I'm not similar to what I said for silver. I'm not pouring into this right here. I would much rather wait for a pullback to 33.5, and then get on board. It's part of LATAM. If you have no LATAM exposure, ILF is also awesome. All right, let's go to the losers. And I talked about this a couple days ago, and I ironically and comically lost subscribers whenever I say bad about crypto. I said Ethereum looks sick. Ethereum is the worst trade on the board, down 13% over the past 5 days. You could do the math, almost 3% a day. Today, right inside that, down 2.5%. So this one is ugly because so I want to give a dog a bone. Speaking of which, Rocco's not been here in a while. He's so lazy. It's horrendous. But Ethereum peaked in August at, call it $37, and really fell into purgatory starting November 17th. And now it's had these little, you know what I'm going to say, meerkats here above 50 RSI. And it had just 3 days above 3 days above a 2-day moving average. And now it's plunged lower again. Today down 2.5%. I don't like it. This thing looks sick for about another. I have this bearish distribution phase to end in Ethereum right around Feb 1. And I've been saying this is going to have a 21 handle on it. And I was saying that, well, it's been on my list here for 5 days when we had a 24 handle. So here we go, 23, and now it's 22. I think you're going to get 21 with a small chance of like a 2095 print. So just inside of 21. But this looks like, to me, it's going lower. Nothing good happens under that 50 RSI, especially in just an asset like this. Technically, if you go in from November 21st, you have higher lows. And this has to hold. This 21.69. I don't think it's going to, unfortunately. I think this goes to 21 even. And then you get a pretty, maybe powerful bounce to about like 23.5. And then that would be a play for, maybe March call spreads for Ethereum. But for right here, this is going lower. You could probably buy, in my opinion, the 22 puts going out, you name it, a month, February, something like that. This looks like it's going down. I think I looked at the option chain on this the other day. Not really a ton of juice, but if you own Ethereum and crypto, we'll get to IBIT. They don't look good right now. They're not, plugging in and buying here. They're still too software correlated for me and the market. Number 2 loser of the week. I don't want to make it super correlated, but there's not a ton of places to go. It's IBIT, down 9% or just inside of 2% a day. Today down 70 bips, a little bit more constructive. So again, here you can see a little bit more clear. It was oversold the week before Thanksgiving. Absolute dog. IBIT touched $46, $47. You're technically getting higher lows, 48. It's barely doing better, but this looks to me like it is also going lower. Still with that Feb 1st end date for the bearish distribution phase, and this looks like it gets to $48. So things that come out to mind, yeah, you can possibly do the $50 puts or the 49 puts. It just does not look well for me. And again, crypto through IBIT peaked on October 6th at $72. And yes, I do believe it is headed to $48 in the next 8 to 10 days. So yeah, crypto doesn't look good. Am I rushing out buying put spreads? Again, the vol is so pump dumping this. So even if you do a, 49, 47, Feb put spread, you could also, I think you could sell those 53 calls, see if you get paid. They're usually just so junky and it's not worth it to suck up so much margin. you don't have to be just right directionally in your portfolio. It's also about balance sheet efficiency. So that's where IBIT gets a little bit screwed up. But yeah, crypto does not look great for the next week and a half. And then after that, I think the bounce that you get to in IBIT is probably just to around these levels, maybe 52. But this looks extremely heavy here at 59. Those levels where we were in mid-November, I don't know when those get taken out anytime soon, unfortunately. All right, and then the next one, this isn't crypto, thank God. The third biggest loser, copper. Look at that, down 5.5%. This was a comical here in July 30th, where this fund lost 20% in one freaking day. And then here is the 52-week high in copper just 8 days ago. It touched 37.5, and here we are, basically a flat day, but it's been getting hit down 1% every day from those Jan 14th highs, still holding 50 RSI, still holding 47 RSI, actually, going back from mid-September when it broke above a rising 200-day moving average. Woo, that's a lot of quantitative information. Copper. So I think here's the deal with copper. This is setting up. I like this. This is finally turning it into opportunity. Option trade coming up. If things get horrendous, I don't think so, but it's going to go to $33.5 to $34. I would freaking love an invitation there. It's not going to happen. I think setups here under 35.5 are recommended, are warranted. I love the risk and reward. It's going to base. I don't think it's going to be an absolute straight line, but I do like entries around that $35 to $36 level. The target for me is just north of new 52-week highs for this. So basically, I'm looking at like 37.80, 37.90. So you could buy the stock. This one's not super liquid in terms of volume. So you could do, COPEX as a different derivative play on this, or you could buy, CPER as the instrument that we're looking at. So again, I don't think it's super liquid, but I would be looking at something like, I would love if they had a March, 37 calls, because they would pay handsomely soon. I think this is going to happen soon. And this has been kicking SPY's butt actually since the end of December. So if you're looking at like here, this has a 34 floor and it goes back up to 37. So giving you some good trades here, especially you could do some, I don't know if they're specifically pairs trades, but you could short US oil for a short-term tactical. And you can go long copper once it sets up, and you can short crypto against that. And then, you could buoy that against having, exposure to XLC, which I think is going to have a decent week of about, $3 upside. Okay, top 3 trades of the past 5 days. If you've been long nat gas, put your coat on because it's freezing outside, but also count your money because you're absolutely crushing it. Long SILJ, the thing is just, people are snorting it essentially. And then short Ethereum, you have the perfect all-weather portfolio for the past 5 days. You've been crushing it. All right. Top 3 trades of the past 52 weeks. Number 1, and we already alluded to this, so you're almost at the end of the program, and I am almost at the basketball game. SILJ is the year-over-year leader, up 7% today. I always love seeing when I have a top 3 candidate on the trades of the week and of the year. That lets me know momentum is here right now. This isn't, let's trade Jimmy Butler because Steph Curry has to win a championship in the next 4 months or it's not going to happen anymore, right? This thing's having momentum right here. This is Curry with Durant and Draymond, and they're winning championships today. That's what's going on with silver junior minors. It's hitting it today. So again, just to recap really quickly on it, I don't want to chase it right here, but if you get an invitation at about 31.5 to 32 in the next 3 weeks, you take that because this is a 2025 winner. I think it's going to dominate 2026 too. And this thing's up, by the way, if I didn't mention the percent, it's up 248% year over year since last January 22nd. So absolutely just psychosis. Number 2, and I am long this, and I'm glad I do, EWI, Samsung. I love where South Korea major holding is Samsung. Love where this ETF sits. Different way to play tech, and it's different from the software concentration that we have in the queues that's holding a lid on it. I've been writing about it, so I'm not going to bore you. This thing has had, you talk about buy first and ask questions later. This thing has been overbought since Jan 5th. Okay. Again, what did I just say? Did you have to be in the trade the whole year? Not really, although you had a really nice clean breakaway early June at $63. To double your money in a geographical ETF is insane. It doesn't happen unless it's very small cap or It's very, very rare. It's hard to do that. EWI, the options are not super liquid. You got to do this through the pretty much through the stock EWI. There is a 3 times double leverage ETF. If you were insane, and I am insane, and I traded it before successfully, it's called Koru, Koru. It is the 3x of this. And you can, just don't hold it for more than 10 days or you're insane. Even if it is overbought like this, because the volatility drag, it has to borrow every day at the end of the day, so it gets expensive. Here's another setup if you want to do this near term. This is literally that setup was 20 days ago, a breakup over 101. I was talking about it, and then here we are. That's what got you to these all-time highs of 116. Okay, and again, former highs. This thing had a hard time going back from 07, breaking above 75. Here again, 78 in 2018. Here, look at these tall shadows. The market was not ready for it in 2021 for it to be at 93, sent all the way down to 46 in 2022, and now just a ridiculous move from December 24 to here, more than double. So you don't get that in geographical ETFs. Samsung's a big part of it, playing tech that way, and Hynix, I think, is the other one that comprises 40% of this fund. Overbought. In terms of right now, I think they're going to take their foot off the gas a little. The candles look amazing. This is your number 2 year-over-year leader, up 107%. I think your entry should come in around 105. This is a little bit much too fast for me. I don't want to get almost 1.5 times remove or X versus the rising 200 moving average. It's a little bit too high velocity for me. And yes, I'm talking long, but I am anticipating, and of course my system will take me out through ATR stocks, but I am anticipating a decline of about 106 over the next 2-3 weeks for this. And that makes sense. Area of the former breakout, and you have convergence of moving averages here. 106, that's a $10 decline from here, almost a 9% decline. What will do it? Will it be Samsung earnings? I'm not sure, but the charts tell me this has to digest gains at some point. Your number 2 leader year over year, and number 3, and I'm in this as well. Like I told you, I don't breathe when I do these things. Uranium up 86%, and I am in this. So I'm super happy to be in EWI. I'm super happy to be in uranium. Usually I have an admiration, I'll say, but I really have no problem committing to a trend. Like I said, hot trade of the week, trade of the year. Uranium actually peaked in October. So sometimes I usually have kind of a flag here in terms of saying like, oh, it's just living in this rectangle. But I'm seeing a formation here. This hasn't even sniffed the 200 moving average since May. And it went on this Michael Jordan run here, being overbought for May and June. And then now it is again overbought. I've been talking about it like every time I log on social media. Everyone says 26 is the year of uranium, et cetera, et cetera. I wouldn't chase it right here, although it does have a lot of strength, and it's been holding 50 RSI since this great looking candle when it added 8% in the start of the year. But for me, an entry is $51. I don't know when you're going to get that $6, like an 11% decline, but I think it'll happen. This still looks a little bit messy for me. Obviously, there's buying pressure. It's real. You're overbought. Something tells me that you'll get an entry at 51. I am glad I am in. These candles look insane, by the way. Like it does look it's maybe going to pinch and get to 58 first before it goes to a 52, if that makes sense. But it is your number 3 leader year over year uranium. All right, I hope that was awesome. I gave you some trades, some potential. Really go in the option chain, do some work for yourself. Look for me maybe if you're watching the Sixers. Go Sixers. Go beat those Rockets. And have a great weekend. And hopefully you don't get a ton of snow on Monday. Look at that natural gas, see what it does tomorrow. And make some snowmen, some snow angels. Peace.